and by that the center has taken the power to levy the tax on the goods, and the state has taken the power to levy the tax on the services. So now the center and state both are having the power to levy the tax on goods as well as services. GST Council will now be working on, they have received more than 40,000 representation on the model GST law, which was in the public domain from 3rd August 2016. They are working on that, and it is expected by the end of November, the GST Council will prepare the GST bill and will put in the hands of the central government and state government for enactment of the GST Act. So friends, we have to understand GST Council will announce the effective date, the operative date for the GST. There will be basically three acts will be there. The first act will be central GST, CGST, the GST Act, Central GST Act. All 29 states will pass the State GST Act, and there will be one IGST Act. So we have the 29 states. So we will be having in all 31 different acts to study and prepare ourselves. But it is assumed that all 29 states will have more or less identical law. So now, you ask me, then what is the readiness of the government readiness? The GST network, it is said that they are at sort of an advanced stage. On the contrary, the chairman has announced that they will be starting with the provisional registration in the month of November itself, So GSTN is, we are not very sure, but what we hear say, they are definitely have done a lot of work, and maybe they are geared up to start the GST, implement the GST with effect from 1st April 2017. So now, friends, what was the need of GST? What was the need of GST? The need of the GST has arisen out of certain shortcomings of our present indirect tax structure. For example, today, as per our constitution, center has a right to levy certain taxes, state has a right to levy certain taxes, and we have a concurrent list on which the center and state both can levy the tax. So just to give you the idea, at present, which are the major indirect tax which the central government is entitled to, the central government is levying at present? We know that central excise duty, excise under Medicinal and Toiletry Preparation Act, the custom duty. In custom duty, we have the basic duty, we have the CVD, we have the SID, service tax, R&D cess. These are the few examples of the major indirect tax law which is administered by the central government. What are the state taxes? The state tax is the VAT and CST, entertainment tax, luxury tax, You must have noticed when you go to the hotel, the hotel is charging you the luxury tax for accommodation. Taxes on lottery, betting and gambling. The state has certain, yeah, state has certain, yeah, state has certain, cesses and surcharges. Certain state we have the anti-tax. Certain state anti-tax we have. In addition to that, we have the stamp duty on agreement for the movable as well as immovable properties, electricity duty, and all these kind of taxes, the state taxes are there, correct? Local body taxes. Local body taxes, we have octroi, we have LBT, we have the property tax, we have the Gram Panchayat tax, we have the entertainment duty, which is levied by certain, the corporations and Gram Panchayat level, local bodies. So what was the issue? What was the issue? What is the lacuna and drawback of the multiple taxes? See, lacuna and drawback, we had an issue of a multiple taxes on the same transaction. I'll give you the example, friends. Today you buy the software from any software company, reputed, the bigger software company, say Infosys or Microsoft or Wipro, they will charge you both the taxes, the VAT as well as service tax on the software. What does it mean? They treat the same thing, software as a goods also, and they treat the software as a services also. Why so? Because both the act defines the software in such a manner that it falls under the domain of service tax also and VAT also. So the question of the multiple taxes on the same transaction. So you take the example of the restaurant sales and the outdoor catering. Friends, the restaurant sales and outdoor catering, the VAT is leviable on a full value. The VAT is leviable on full value. VAT is leviable on the full value. And actually it's a composite sale. You have the food also and you have services also. But the present structure is such that, the present structure is such, the VAT is leviable on the full value that includes the value of the service also. There is no concept of rebate for services in the VAT. Service tax, yes, on the same transaction, service tax is levied, but it is levied on the value of the services. So effectively you are paying, suppose the value of the, suppose total your bill is 100 rupees. So VAT is levied on 100 rupees and service tax is levied in the restaurant sale on the 40 rupees. So you are paying the tax on 140 rupees. Definitely 100 rupees to the state, on 100 rupees to the state government and 40 rupees to the central government. So it amounts to the multiple taxes on the same transaction. Similarly, it's an issue for the works contract. In case of an other works contract, if you are taking the example of other works contract, the under the service tax law, you have to pay the tax on the 70% of the value of the works contract. And if you are going for a composition scheme under VAT, you are paying around 8%. You are paying on the 8% of the value of the works contract. This means This means you are paying multiple taxes on the works contract. You are paying you are paying multiple taxes on the works contract. Similarly, the issue of the royalty, franchise, trademark, the royalty is being treated as a goods as far as royalty is being treated as a goods as far as VAT is concerned, and it is also treated as a services. So there are the problem of the multiple taxes on the same transaction. We have the restrictive, the problem of restrictive tax credit. For example, a manufacturer and trader are not eligible for the input CST credit. Input CST credit is a cost to them. Service provider are not eligible for input VAT credit. As a chartered accountant, if I am buying the material, goods, say stationery or computer or furniture of my office or any other goods, the VAT I am paying, I am not allowed to set off against my service tax liability. Service provider is not eligible for a credit of SAD on the import. The trader are not eligible for credit of input of excise duty and service tax. If I buy I am a trader, I am not eligible to the credit of input excise duty and service tax. And traders are not also eligible for the CVD on the imports. So friends, there was a there was no fungibility of the tax credit. This resulted into the cascading tax effect. I am paying tax on tax. One more problem is the present, the tax regime. We have the 29 states, and all 29 states have a different tax rate, VAT tax rate, different VAT provisions. And that's why, we have the multiple, the check nakas, tapas naka, chungi naka at various, the states. So there's an entry barriers, that restrict the free movement of the goods. That's why, our Indian exporters are non-competitive in the global market. The cost of the product, is having the multiple cascading effect of the tax. The tax efficiencies are built up in their cost. That's why we are not, as a country, our exporters are not tax efficient in the global market. We are not competitive in the global market. Because of the tax on tax, because of the tax, multiplication on the same transaction, the ultimate price in the hands of the customer is very high. And we have a lot of ambiguities, lot of litigation on this indirect taxes. This is one of the very known litigation, whether VAT is applicable on the service tax. So in a works contract, the service tax is levied. Then while calculating the VAT, whether the service tax element has to be calculated, service tax taken into account for the purpose of VAT or not. These were all the problems, these are the glimpses of the problem that I am giving you. Voluminous compliance. If you are a manufacturer, you are filing the 12 excise returns, you are filing the 12 VAT returns, you are filing the annual VAT return, you are filing the 2 service tax returns, multiple agencies assessing you. You have to go to excise department, you have to go to the service tax department, you have to go to the VAT department, and there are multiple proceedings are there. So it was high compliance cost. So these were the few basic issues of our indirect taxes. So now the government thought In fact, this thought process was there from 2004 onwards. Dr. Vijay Kelkar has given the report that country should go for a GST. This report was given way back in 2004. It took for us to come up to GST, it took 12 years for us. It took 12 years for us, and after 12 years, in 2016, we are seeing the GST becoming reality. So now, yeah, now what is the major changes in the tax pattern? What is the major change in the tax pattern in GST? Friends, in GST, what will happen? These are the tax which you are seeing on the screen will be subsumed in GST. The central excise duty will go, additional excise duty will go, excise under monopoly or the Medicinal and Toilet Preparation Act, the countervailing duty which is levied along with the custom duty, the special additional duty and service tax, and perhaps R&D cess. All the things will be subsumed in GST. We will not have all these tax that will be part of the GST now. Similarly, state taxes. What are the state taxes that will form part of GST? The VAT/sell tax and CST, the purchase tax, the entertainment tax collected by the state, luxury tax, taxes on lottery, betting, gambling, even the entry tax and state cesses and surcharges. I have put question mark here because it's a matter of dispute now in the GST Council whether this surcharge, the state cesses and surcharge, will be there or not. Then the other local body taxes, octroi and LBT. You must be seeing that I have put some question mark over here, octroi and LBT, because we have one constitutional entry which 245 some article is there, whereby the local bodies, the municipal corporations, are empowered to collect the octroi and LBT. That entry has not been deleted, but we have been listening, we have been hearing from the government that octroi and LBT will be subsumed in the GST, and legitimately it should be subsumed because the powers are given to the corporations are the powers which are delegated by the state to the corporation. So the state, if state do not have the powers, definitely delegated power should not be there. So I personally believe that octroi and LBT should be subsumed in the GST, but surprisingly in the Constitution Amendment Act, that entry which I am referring to has not been deleted. Which are the tax still will be there even after the GST? Please don't be under impression that all indirect tax will vanish and you will have only GST. No, that is not the case. Certain taxes will still remain. Certain taxes will still remain post GST. For example, the central excise on tobacco products and petroleum products, they will still remain. And basic custom duty, the custom duty is not getting subsumed in the GST. Only CVD, countervailing duty and SAD is getting subsumed. But the basic custom duty is still not getting subsumed under the GST. So we will have the GST, we will have the custom duty even after the GST. What are the taxes? State level taxes will remain after GST. State excise on alcohol liquor. State excise on alcohol liquor. That was under the power of the state to collect the excise on the alcoholic liquor. that will continue. Even the state VAT on alcoholic liquor and the petroleum products, that will continue. The state will have a power to collect the VAT on the alcoholic liquor and the petroleum products. Stamp duty is not getting subsumed. The state will still have the power to levy the stamp duty. Electricity duty will still be levied by the state. The profession tax, road tax, taxes on mineral rights, these all are the taxes which will still remain, and the tax state will collect it. What about the local body taxes? As I have told you, octroi and LBT, in my view, it should be subsumed. But I put the question mark because of that constitutional entry has not been deleted. Local body will still continue to collect the property taxes. Property taxes are not being, subsumed in the GST. Entertainment tax. Entertainment tax means collected by the local bodies. Certain entertainment tax are within power of the local bodies to collect, the Gram Panchayat to collect. Like you have the local mela in the village. On that the Gram Panchayat collects some taxes, entertainment tax, that will remain. And the Gram Panchayat tax, that will remain. Friends, so now, after the constitutional amendment, let me take you to certain sector or certain products, because that are some exceptional products and exceptional sector. So you should know what is the GST, opposed GST, what will be the implications. Let us take the first petroleum products. Friends, under the constitution entry, the petroleum products has been brought under the GST to begin with. But because of, there was a dispute, not dispute, but the state were not, ready to give it up, the revenue on the petroleum products. So as on date, what has happened, that petroleum products, though in the GST net, will not be effective in GST till the notified date. That notified date, at the later date, maybe after 1 year, 2 year, 5 year, 10 years, if the consensus has arrived at, then the petroleum might go to the GST. Till that date, the petroleum will be out of the GST. What will happen? Naturally, the central excise will be levied on the, the petroleum products. Till that, state will levy the VAT. If there is an inter-state transfer of the petroleum products, there will be CST also, and there is no state excise on this. So what is the implication of this, friends? The implication of this is, say you take the example of the refineries. All their inputs which will come to them, that will suffer GST, correct? That input GST will not be set off against the output central excise or the VAT liability, because on the input side you are paying the GST and output side you are paying the excise and VAT. So this excise and VAT, you cannot set off this GST, input GST, you cannot set off against the excise and VAT. And those consumers, B2B, means the petrol products are used by certain factories also. Industrial consumers, they will not be entitled, because they will get their bill or material in which the refineries will be charging the excise and VAT, and this all the consumers will be using this product, industrial product, petroleum products. Their output liability will be GST. So central excise and VAT paid to the petroleum, remember to the petroleum refineries, will not be set off against this GST. And friends, petroleum products if it is not covered in the GST, it will have a huge cascading effect. See, take the example of a aviation industry. If the aviation fuel suffers the excise and VAT, and the airlines is charging you the GST, they will not get the set off of this, the VAT and excise paid on the aviation fuel. So you will have a cascading effect, tremendous cascading effect. You and me as a consumer will have to bear it. Take the example of a tobacco products. Tobacco products, GST, yes, tobacco is brought under the GST. Tobacco is still, is not removed from the excise. So tobacco will suffer two levies. They will pay the GST also. All the cigarette producing factory will still be liable to pay excise. In addition to that, they will pay the GST. Thankfully, but VAT has been deleted under the Constitution. The power to levy the VAT on the tobacco products has been taken away. So there will not be VAT on the tobacco products. CST, in my opinion, it will be yes, because entry 92A of the list 1 is not yet removed. That could be dispute on this. So state excise is not leviable on the tobacco. So as I told you, considered as a seen good, tobacco products are seen good. It will suffer both GST and excise also. So friends, suppose GST rate comes to 20% and excise rate, on the tobacco, which is as such is very high. So cigarette smokers will have to, contribute more to the nation. Input GST will be set off against the output GST, yes, because since the GST is leviable, the tobacco producer, whatever is buying by paying the GST, buying the goods and services, that will be set off. Input GST will not be set off against the output excise liability. And consumers B2B cannot take the standard credit of ITC credit of the. Now alcoholic liquor for human production, basically there is no change in that. That government has kept it untouched. It means there will be no GST on the alcoholic liquor for human consumption. There will be no central excise duty. What will be there? There will be state excise duty, there will be VAT or CST. So basically, absolutely there is no change as far as output tax liability. Output tax liability of the alcoholic liquor is concerned. But the problem will be inputs, because alcoholic liquor producer will also buy the goods and services which will suffer the GST. So input GST will not be set off against the output tax, excise or VAT liability. And suppose you are a consumer means not alcoholic consumer, I am talking of an industrial consumer who uses the alcohol in their some of the product. So when the alcoholic liquor guy charges the that person or state excise or VAT excise, that will not be set off against the GST. Now friends, I come to the GST salient features. Yeah. See now, let me start with I will go a bit slow here, and I think you are having my PPT on the screen. Yeah, my PPT on the screen. Correct? Yeah. The meaning. Let us start with the GST. What is GST? The meaning of the GST, if I were to summarize in the one line, it's a broad base, comprehensive levy on goods and services consumed in economy. how the GST will operate in the system. See, world over, I am being, to the best of my knowledge, 166 countries in the world, 166 countries in the world have implemented the GST. To my surprise, most of the European countries, most of the European countries, most of the European countries, many of the Asian countries have, you know, implemented the GST. But one of the major superpower in the world, USA, USA is not in the GST. And our GST model differs differs from most of the countries. We have a dual model. Why dual model? Because we have the we have a federal system wherein the tax state has a autonomy, the center has an autonomy to collect the taxes. So our government in its wisdom thought it fit to follow the dual model of GST, dual model of GST. What do you mean by dual model? See, in other central GST, which is called CGST, which will be levied on intrastate. What do you mean by intrastate? Within the state. Intrastate supplies. Huh? The CGST levied by the central. We have the state GST, which is called SGST, which will be levied by the state government on intrastate supply by intrastate. So in case I'm selling the goods from Mumbai to Nagpur, then this supply will suffer two taxes called central CGST and the state GST. Both the above taxes would be levied simultaneously on the same sub. So suppose I am making the bill for sale of goods or for supply of the services, and for our discussion we are presuming is GST rate is at 20, and let us presume percent is the CGST and percent is the SGST, correct? So if I am supplying, then I'll be charging as a supplier 10,000 rupees and 10,000 rupees SGST. On the two taxes, and the 10,000 will be paid to the central government, to the center, and 10,000 will be paid to the state government. Then we have integrated GST, IGST. This will be on an interstate supply. Interstate supply means if I am selling the goods from Maharashtra to Gujarat, then I am not charging central GST or state GST, IGST, but IGST. That is, the 20 will charge IGST will be allocated by center, through the, the mechanism. They will have GST and network mechanism, wherein the tax will go to the state, which is entitled to collect that. The major difference in the present tax system and the GST is, see, today we have a and originating state has right to collect and retain the weight. For example, goods are manufactured in Maharashtra and sold from Maharashtra to Gujarat. Then Maharashtra will have the right to tax that goods. They will collect the VAT and it will be retained by them. It will be collected as a CST. The center will collect it. Ultimately, that tax will come to the Maharashtra. So we are moving, as far as taxation of goods is concerned, from originating trade to the base consumption tax. What I mean by this? It is collected and written by state. But under the GST regime, what will happen? The tax will accrue to the taxing authority, which has jurisdiction over the place of consumption. Suppose from Maharashtra I am selling to Gujarat. My goods are ultimately destined to Gujarat. In that case, whatever IGST that I will be charging, Maharashtra dealer is charging Gujarat government. Similarly, friends, one of the important things we have to note, the supplies imported into the country. For example, somebody is importing goods from Japan. This supply will attract the GST, and the person who is importing will be liable GST. It will be liable to pay the GST. And that supplies exported outside country will not attract the GST, because the principle is the tax is their own. This will be the destination based consumption tax. Anything which is consumed within the territory of India, the India will have the right to tax it. Anything within the state, that state will have to tax the right to the tax collection from that consumption. This is a major change in the philosophy in the GST. Friends, today we do not have the TDS in excise. We do not have the TDS in the service tax. We do not have the TDS except limited extent of work contract. We have the TDS, but any other, and on any other purchase or sale of goods, there is no. So now the marked difference between the GST and the old system, old indirect tax legislation is this: the specified recipient of the goods and services of the contract exceeding rupee 10 lakhs will be obliged. Please understand, friends, they will be prescribing the service recipient who will be liable to deduct the TDS. They have made the provision, enabling provision, they have any specified recipient goods and services where the contract value exceeds rupee 10 lakhs, they will be obliged to deduct TDS at the rate of 1% on the amount paid or credited to supplier's account. Please understand, friend, this TDS to the income tax TDS. This is in addition to income tax TDS. Having deducted that 1%, the deductor has to pay the TDS of the subsequent month. The deductor has to issue the TDS certificate within 5 days from the payment of tax. Monthly of subsequent month. So additional obligation of TDS has come on, this TCS. The TCS, mainly the e-commerce operator, will have to retain the TCS for the supply of goods and services at a prescribed rate from the payment due to the vendor, and they have to complete all the formalities of paying the taxes, filing the returns and all. Friends, about reverse charge. Reverse charge in the VAT. We never had a reverse charge in the excise, but now under the GST law, it is being proposed that reverse charge under prescribed cases. They will not yet prescribe anything. The prescription will be made by the GST Council, but they have the power to collect the tax on the reverse on goods, and but only one solace is there. Unlike service tax, there is no concept of a partial reverse charge in the GST. And friends, about the exemptions are yet to be. Please understand, today as on date, the law do not prescribe any exemption whatsoever. It is presumed, we presume that, like we have, the notification number 25 by 2012 in the service tax, we will have the similar kind of exemption notifications in the GST. So these are the synopsis of GST. And what will change? What will change? Basically, what will change, friends? Let us take the old law in the service tax. What was the taxable event? Provision of services. In excise duty, the manufacture of excisable goods. In VAT and sell tax, transfer of title in the goods within the state. In CST, transfer of the goods outside the state. Purchase tax, purchase of the specified goods. CVD was payable. See, you will have the different taxes and different taxable events. CVD on import, SAD on import, entry tax when the goods are entering into the specific state, entertainment tax, provision of the entertainment. Now, friends, everything will go. Everything will go, and there will be one taxable event, that is supply of goods / services. Only one taxable event. Taxable event is supply of goods and services. Now, what I am going to now do, I will be giving you the broad scheme and glimpses of the GST. I am not going to explain you the each and every provisions, because to do that we do the 6-day chamber does the 6-day course. So it's not possible for the time within time allotted to cover this. What I will do, I will tell you the broad scheme of the GST taxes, concept of the GST, correct? How it operates. If I were to give you the small summary, when GST is applicable. GST is applicable when the taxable event occurs. What is the taxable event? Supply of goods and services, correct? Second, when to pay the GST? When the time of supply comes. We have point of taxation in the service tax. In the excise, we pay the tax when the goods are removed from the factory. we pay the, VAT when the goods are transferred. So these are called the, point of taxation. Here we have the time of supply, the time at which the goods and services are supplied. That is the time at which you have to pay the GST. Whom to pay? Whom to pay means, as I have told you, you have to pay the taxes to the two government, central government and state government. Among state government, there could be 29 states. So you have to decide either you are interstate, which state to pay, which government to pay, that is whom to pay. That all will depend on the place of supply. As I have told you, it is a consumption-based destination tax. The goods ultimately destined for the consumption, that will be the place of supply. That is that you have to pay that, the tax will ultimately due to that state. We'll come to that. Then comes how much to pay. See, once you are saying, taxable event has occurred, you know the time of supply, you know how to pay IGST or SGST or CGST, which state to pay. Then you have to decide how much to pay. How much to pay will depend on the value of the supply, correct? Valuation of the supply. Then the rate of the tax. GST rate is not yet prescribed. You apply that value to the rate, and you have to take the input tax credit. Whatever GST that you are paying, input tax GST you are paying, you are entitled to take the set off, and that will be the amount that is liable to pay. And after paying, but before paying, you have to take registration, the part. You have to take a registration, you have to make a payment of the taxes, and you have to file the returns. Friends, so this is the broad framework. Now let us go one by one. GST applies to whom? Friends, GST applies to whole of India, including Jammu and Kashmir. This is a marked departure from, your VAT law and the service tax law. Excise was applicable to Jammu and Kashmir, but as far as service tax was concerned, it was not applicable to Jammu and Kashmir. And the local VAT law of, Jammu and Kashmir was not having VAT law; it was having state goods and service tax. So this new law will apply to entire India. I am not going into detail what is India means. It is there in our slide. Now we have a charging section under the GST. Which says very simple section. If you read the slide, I will tell you, I'll read for you. A tax shall be levied called CGST, SGST or IGST on intra or interstate supplies of goods and services. It means I have to pay CGST, SGST or IGST on intrastate supply or interstate supply of goods and services at the rate specified in the schedule. But still the schedule had not come. The schedule will come. Like, we have the excise tariff act. We will have the different rates for the different items. We will have the, schedule will come. And it is payable by a taxable person. If you are a taxable person, then you have to pay. If you are not a taxable person, then you have not to pay. And the central government, state government has a right to specify the categories covered under the RCM. If you study this, charging section, and let us, now go on the, one by one, the, the whatever, I have marked, I have highlighted in the bold letters that we need to understand. See, friends, there are, before that, I will take you to the composition levy. Composition levy is basically meant for the small assesses, because everybody will not be paying the tax at a normal rate, the 20% or 21 or 22 or 18, whatever the, the council decides. The composition levy, GST council, this is for a smaller assesses. The GST council will recommend the composition levy, and the rate, they say it will not be less than 1% of the turnover. It could be more than 1%, but the composition rate will not be less than 1%. And the proper CGST or AGST officer may permit supplier to avail the benefit of the composition levy. It means, from the wording it appears that we need to seek the permission of condition for availing the composition levy. Friends, you have to excuse me because I am doing this webinar for the first time. There could be some lapses on my part. You have to, bear with me because I am totally, not used to this kind of webinar. The first time I am doing it. Yeah. So, aggregate condition for availing the composition levy. First condition is the aggregate turnover should be less than 50 lakhs rupees. It means if you reach 50 lakhs, then you are out of the composition. You cannot go for a composition levy. The turnover, aggregate turnover should be 50 lakhs. In this 50 lakh turnover, there should not be intrastate supply of goods and or services. And think of a chartered accountant, a small chartered accountant having turnover of say 10 lakh rupees. And if he deals with say Maharashtra mein, this fellow is owning the office in Mumbai, and if he advise some Surat client, Gujarat client, it will be treated as an interstate supply, and he charges you say 1,000 rupees for advice. Even the 1,000 rupees interstate supply, which disentitle him from the composition levy. Means there should not be any interstate supply if you want to go for a composition levy. Again, for calculating this, suppose you are having a branches in a various part of the country, you have to take turnover of all the branches, and if you apply for, you cannot apply for the composition scheme only for the Maharashtra. Once you apply for a composition scheme, you have to apply for the composition scheme on the all India basis. Friends, this composition person who is going for a composition scheme, he cannot claim the input tax credit of GST that he is paying on his input supply. And naturally, on the output side, he cannot collect the GST on the supplies made by him. It means his price should be inclusive of the his composition tax. It will not be specified on the bill. So that naturally the person who is buying from a composition dealer, he also will not be entitled to the ITC. So this is, friends, the composition scheme is, and we have it has been there has been newspaper report that this composition scheme would be available, will not be available to the manufacturer and the service provider. But law does not say this. GST Council, this is a newspaper report, so I don't know how much it is reliable, but there were rumors that GST Council is of the view that this composition levy should not be made available to the manufacturers and the service providers. Friends, see this chart. If it is on your screen, yeah, it is on your screen. This is a very simple thing. What are the trigger points for GST levy? Number one, a person should be a taxable person to begin with. If you are not taxable person, you are out of the domain of the GST law, correct? if you are a taxable person, if taxable person makes a supply of goods and of services, whether a and this supply has to be either interstate or a intrastate, then the GST triggers. So friends, let us be very clear. I'll repeat because this is very important. Assessee should be the person, should be a taxable person to begin with. The levy is on supply. There has to be supply. Supply of what? Goods and or services. And supply could be intrastate or could be interstate. Then only the GST triggers. Now we need to understand all these concepts very, very clearly. So yet I have told you what is taxable person. Taxable person means, first the definition is means and includes. It means taxable person is a person who carries on any business in India or any state in India. Any person who is carrying a business, and business is widely defined to include the profession also, to include the trade also. We will have a glance over that slide also. Taxable person means person who carries on the business, person who carries on the business, and who is registered or required to be registered. See, means person, so first he should be carrying on the business, either in any part of India or any state of India, and either is registered or required to be registered under Schedule 3 of this Act. Then is a taxable person. Now, and it includes, please understand, a taxable person means person carries on business, either is registered or is required to be registered under Schedule 3 of this Act. So friends, let me first take you to the Schedule 3. If see, who is registered means, person who is registered means, suppose as on today, you are registered for service tax or excise or a VAT, then you are automatically registered for the GST. Means you have become a taxable person, because they will be providing you automatic registration once you are registered under the present law, service tax, excise or VAT. So if you understood, if you are registered under the present law, you are a taxable person and you will continue to be a taxable person under the GST. Or you are required to be registered under Schedule 3 of this Act. What is the Schedule 3 of the Act? That I will tell you. Yeah. See, I think friends, Schedule 3 gives the list, certain situation when you are required to be registered. I will just, take you to it. As I have told you, every supplier who is presently registered, correct, is required to be registered under the GST, correct. Every person who is having an intra-state supply, it means dealing with the neighbor, dealing with other state, or even for 1 rupee, he will be required to be registered. A non-resident and casual taxable person, mainly, you take the case of, jewelry exhibitors, a person having a shop in Bombay, he goes and exhibits the jewelry in Goa exhibition. He is called a casual taxable person for the state of Goa. He will be required to be registered. Non-resident taxable person who is non-resident and comes to India for a business, he will be required to be registered. Every person who is liable to pay tax under RCM, under the reverse charge mechanism, irrespective of threshold, he is required to be registered. See, please understand, this is irrespective of the threshold I am talking of. Any person who is acting as an agent of any principal, he will be required to be registered. Any person who is liable to deduct the TDS, he is also required to be registered. Every e-commerce operator is required to be registered. Flipkart, Amazon, Snapdeal, every e-commerce operator will be required to be registered. Every person who is selling their goods and services through the e-commerce operator, they will also be required to be registered. Service aggregator like Ola and Uber, who are providing the branded services through the e-commerce, they will be required to be registered. Input service distributor is required to be registered. And main thing, a person, please understand friends, this is there, if a person is having a turnover of rupees 20 lakhs. See, in the model GST law, they have said 10 lakh rupees, but there is a newspaper report which says the basic threshold limit will be not 10 lakh but 20 lakh rupees. So I am telling you, that's why I am putting both the figures before you, either 20 lakhs or 10 lakhs. Let us presume that it will be 20 lakhs rupees. Any person who is supplying goods or services more than 20 lakhs rupees will be required to be registered under the GST law. But this limit is for the normal states. Northeastern state, the limit is exactly the half. It is 10 lakhs rupees. So there is a conflict between the model GST law and what the newspaper report says. The GST council is, enhance the limit to 20 lakhs and 10 lakhs. 20 lakhs to the normal states and 10 lakhs to the northeastern states. That's 7 states, Sikkim, Mizoram, Arunachal, Nagaland, these are the states. Friends, again, please understand the 20 lakh turnover, that is called aggregate turnover, will include taxable supplies, exempt supplies, even if it is exempted under any notification, but it is to be included for calculating for registration. Even your exports are not, it will not be liable to GST, but for calculating the threshold, you have to include even the export turnover also, and not only that, even the non-taxable supplies. It means your entire turnover, whether it is exempt, whether it is non-taxable, whether it is export, everything is to be calculated for the 20 lakh rupees. Friends, not only that, but aggregate turnover should include any tax other than CGST, SGST and IGST also. So friends, what is excluded for calculating the threshold limit of 20 lakh rupees? You have not to take CGST tax, central GST, state GST, or the IGST which you have collected or charged to the customer. That has to be not to be calculated in the turnover. Value of the supplies on which the RCM is paid. Suppose I am a dealer and I am paying the RCM on certain values, certain services I have taken or goods I have bought. I am not liable to include that in my calculation of the turnover. And also my inward supplies. See, today I believe under the VAT law, the definition is your turnover exceeds, correct? And turnover includes the purchase also. For example, you have purchased of certain amount. If you exceed threshold, you are required to get registered. Here in the GST, the inward supplies are not to be calculated for this registration. So now I come back to taxable person who carries on the business, who is registered or required to be registered under the Schedule 3 of this Act. He is a taxable person. And it includes the central government in respect of certain activities, central government, state government, local authority, that is also a taxable person. And what the taxable person excludes? Friends, only one thing I will tell you about the business. I am not going into detail of it. Any person who is doing the trade, commerce, manufacture, profession, vocation, or any other similar activity is carrying on a business. And one thing we have to keep in mind, the provision of the facilities benefits to the members by club, association, society, or any such body for subscription or other consideration, they are also deemed to carry on the business. So we can't say our cooperative society is not carrying on a business. By the deeming fiction, by the definition of the business, even the societies, club, association societies, or other body providing the services or facility to members for subscription, that will be deemed to be the person carrying on business, taxable person, and they will be required to take a registration. Now, taxable person excludes certain things. What does it excludes? If your aggregate turnover does not exceed 20 lakhs or 10 lakhs for the north in the state, then you are not a taxable person. Correct. Agriculturist. Agriculture is altogether excluded from the definition of the taxable person. Agriculture is not a taxable person. A services by employee to employer in relation to his employment will not be included in the he will not be a taxable person. So employee is not a taxable person in respect of the salary he receives. So friends, person engaged exclusively in supply of goods and service not liable to tax. Suppose, presume that, say for example, they might exempt the medical services. So if the doctor who is exclusively engaged in provision of the medical services may not be required to himself to register even if his turnover exceeds 20 lakh rupees. And person liable to pay tax under RCM receiving services of value not exceeding that amount they are going to specify in a year for a personal use other than use in the course of business or further business, they will be required to be registered. For example, somebody, a student from India, he takes admission abroad and he avails the education services. Then he may be liable to pay tax under RCM because he has imported the services, but there will be some exemption, threshold exemption will be there for the personal use. In that case, he will not be required to register. So we understood the definition of the taxable person. Now, threshold exemption we already discussed, friends. 20 lakhs threshold exemption does not apply to whom? Non-interstate suppliers, casual suppliers. See, threshold will not apply. These people will be required to take registration even if the turnover is 1 rupee. Interstate supplier, casual taxable supplier, non-resident taxable person supplier, person liable to pay tax under RCM, person acting as an agent, all people are liable to take the registration and pay the tax irrespective of the threshold will not apply to them. Now, as I have told you, the tax is on what? See this chart. Tax is on supply. Have I told you that? Yes. Tax is on the supply. Let us divide the supply into two parts, physical supplies and the deemed supplies. Supply includes the physical supply. And what do we mean by this? Any supply for consideration. Supply of goods and for services, yes, for a consideration, it is a supply. It will be liable to GST. Physical supply under 3(1) means importation of service, not importation of goods. Importation of service with or without consideration. Friends, import of service from outside India will be a supply. whether it is with consideration or without consideration, it will be supply. And in addition to this, what they have said, certain physical supplies without consideration will also be deemed to be a supply, that is given in Schedule 1. I take you to the Schedule 1. Permanent transfer or disposal of a business asset. What do you mean by this? Permanent transfer or disposal of business asset. For example, you are a proprietor of a company, you are a partnership firm or a proprietor, and if you sell off the business completely, transfer the assets or disposal of the business asset, it will be, or even if if it is get transferred in the process of inheritance also, in my opinion, it will be covered. Even if you are not receiving any consideration, it will be deemed to be the liable to GST. Temporary application of business assets to a private or non-business use. If you are using your car for your business purpose, and if you are using the car for your personal use also, then definitely it will be treated as a deemed supplies and the GST will be leviable on this. Service is put to a private or non-business use. Take the example, you are a hotelier and you put your personal guest into your hotel and you are not charged him for, you are not charged him any consideration, you are not charged any accommodation charges to him. So these are the services put to a private or non-business use by the hotelier. This also will be liable to GST. Asset retained after deregistration. Suppose you are a chartered accountant and you retire from the business. You want to close, you reduce your activities, and you are now doing less than 20 lakhs rupees. Then if you deregister yourself from GST, whatever assets are retained by you, that will be liable to GST. Even you are not getting any consideration. And the most talked about provision is supply of goods and services by any taxable person to another taxable person or a non-taxable person in the course of furtherance of business. Take the classic example of a pharmaceutical companies providing the free sample to the physicians. This will fall here. Pharma company supplying the goods to a taxable person, say doctor, or so doctor is not a taxable person, but these pharmaceutical samples are supplied in the course of the pharmaceutical company's business. It will be liable to, treated as a deemed supply and will be liable to GST. There could be number of examples here, but for the paucity of time, I will not go into the examples. So friends, you understood this. Supply for consideration, supplied without consideration, import of services, all the things are supply and will be liable to GST. On top of it, they have said certain deemed supplies. Refer Schedule 2 for that. I am not going into the details of that because it will take a lot of time. Any supply, they have given the Schedule 2, where is where no, this is deemed goods supply. Yeah, friends, I will not deal into detail, it will take a lot of time. So what I will do, yeah. So deemed supply under section 3(2) means we have the schedule 2, supply between principal and agent will be treated as supply. They have done away with the principle of agency. If you are supplying the goods to your consignment agent, it will be treated as a supply and it will be liable to GST. And friends, sorry, I have forgotten one thing to tell you. See, in the last line, supply of goods and services by taxable person to another taxable person or a non-taxable person, a manufacturer supplying the goods to the job worker for a further processing, this will be treated as a supply of goods subject to certain conditions that I will tell you when I come to that slides. So let me finish that. For example, job work. Job work could be two types of job work. One is under section 43A, whereby you have to take the permission of the commissioner, GST commissioner, and you can supply the goods. You can send the good to your job work, without charging the GST. And job worker can send back the processed goods or semi-finished goods without charging the GST. This is called job work under section 43A. And there could be job work other than 43A. It means when the manufacturer sends the goods to the job worker, it will be treated as supply. So job principal has to charge the GST on that supply. When the job worker processes the goods and he sends back the finished goods or semi-finished goods, even the job worker has to charge the GST on that. The concept is that of supply. It is not a concept of sale. Please understand, the concept of transfer of ownership is totally irrelevant as far as GST is concerned. It is basically the concept of only supply. So friends, I have done with the schedule. Now as I have told you, supply with principal agent will be regarded as a supply. Supply of branded service by an aggregator, Ola, Uber, providing the branded services through their e-commerce website or network. That will be treated as supply by the Ola and Uber. Ola and Uber will charge the GST on that. The taxi drivers will not charge the GST on that. And any notified supply. And the supply definition is very, very wide. If you are falling under the definition of supply, then you have to think of the GST application. And what is the supply of goods? Correct, friends? The tax is leviable on supply of goods and supply of services. That's why it is important to understand the definition of goods. Goods means every kind of movable property, other than other than goods means every kind of movable property other than actionable claim and money, and it includes securities, growing crop, etc. And they are saying movable property shall not include the intangible property. It means any kind of movable property which is not a intangible property like franchise, trademark, that will be treated as the goods. And if you are supplying these goods, it will be liable to GST. Now, what is service? Service means 6:30. Yeah, then I can go a bit slow. Yeah. Service means anything other than goods. Friends, they are very broadly defined. Goods they have defined, and their service means anything other than goods. And they say service include intangible property. So any transfer of a trademark, the film distribution rights, or a franchise, or technical know-how, all the thing for the purpose of service tax will be treated as a supply of services. and even actionable claim will be treated as a supply of services, but services will not include the money. So friends, this definition of goods and services are very, very wide. What is actionable claim? Because now actionable claim will be service. This factoring of the dates. If somebody is factoring the dates and buying the dates, it will be actionable claim which will be treated as service and will be liable to GST. Dealing in the lottery is a services, and I don't think winning of the lottery is services. Only the dealing in the lottery will be services. Intangible property services, as I have told you. So, whether the permanent transfer of package software, you will agree it is a intangible property. The brand name, trade name, copyright, patent, theoretical rights, non-theoretical rights, all are the services and will be liable to GST. It will not be a goods. It will not be a goods. Today we have the dispute whether it is goods or services. The VAT department claims the stake, and even the service tax department is asking for the service tax their own. So now only problem here is, friends, if you see the definition of goods, the definition of goods say start with every kind of movable property. It means goods do not include the immovable property. And when you go to the definition of service, they say service means anything other than goods. If you read it very, very, if you read it as it is in a plain, if you take a plain interpretation, then as on today, the immovable property does fall in the definition of services. Immovable property today falls under the definition of services. Is it the intention of the government to tax the immovable property under GST, the sale of your completed flat? Is it liable to GST? My personal view, friends, on this is that there would be, some exemption in respect of immovable property. That doesn't seem to be intention of taxing immovable property. The reason is this: the stamp duty is not getting subsumed. Correct, friends? So immovable property, though at the first reading you may feel that the sale of immovable property will be liable to GST because the definition of goods does not include immovable property, and whatever is other than goods is a service. So does it mean that it becomes service and taxable? Yes, friend, on the plain reading of the definition, it will give the same meaning. But when we come, when the final law will be declared and exemption will be declared, at that time we will first come to know whether the immovable property is excluded or not. In my opinion, immovable property, they would exclude, they will exempt the immovable property. Friends, now we understood what is supply. Now when to pay the tax? That is point of taxation, that is time of supply. Friends, go on the right hand side of my slide. The general rule is earliest of this removal of goods, the earliest of this point will be the time of supply. For example, you are removing the goods from your premises, or goods are made available to the recipient. Date of issue of the invoice, date of payment, means date of receipt of the payment, and date of receipt of the goods by the consumer, whichever is earlier. Friends, you will understand now, as on today, we are not paying the VAT on the advance we receive against the goods. We are not paying excise on advance we receive against the manufacturer do not pay the advance received by him against the supply. But in the GST law, In the service tax, yes, we are paying the service tax on advance received against the services. But in GST law, the point of taxation is earlier of all the dates. Suppose if you receive the money in advance, the advance will be liable to GST. So this is one of the marked departure from the existing law. Friends, whom to pay the tax? See, we have decided now, supply we understood, when to pay the tax we understood, either on the date of removal of the goods, date of invoice, date of receipt. These are the 4-5 criteria I have given you. Earlier date you have to pay the tax. Now, whom to pay the tax? Will you pay IGST? Will you pay the CGST, SGST? You have to think only, you have to decide. Only 2 criteria you have to keep in mind. Where is the location of supplier? Which state? Location of supply here means location of supply of goods or location of supply of services, correct? And where is the place of supply? See, please understand, location of recipient here is not relevant to decide whether you are paying IGST or CGST, SGST, GST. What is relevant is a location of supplier, in which state is situated. Suppose location of supplier is situated in Maharashtra and the place of supply is in Gujarat. It means both are in a different state. So it becomes a interstate transaction, and in case of an interstate transaction, IGST is payable. Hope I am very clear. 2 criteria: location of the supplier, if it is in Maharashtra, place of the supply, if it is in Gujarat, both are in different state, then interstate, and if both are in the same state, say Maharashtra to Maharashtra, then it is an intrastate, and you have to pay CGST and you have to pay GST. You have not to pay IGST. Now, who will decide? See, location of supplier is easy to understand. Who will decide what is the place of supply? They have laid out very objective criteria in section 5 of the IGST Act for the supply of goods, and they have come out with the section 6 of the IGST Act, which gives the criteria for the place of supply of services. You have to apply these objective rules. You are not to go by your perception or your interpretation.
Go to 6:15 when question answer.
Yeah. What is the time now? Friends, I have been given time up to 6:15. 6:15 I will be stopping my presentation and we'll take the question answer session. Yeah?
46.
Yeah. So 6:15, eh? Yeah, half an hour. Yeah. So now, so location of supplier, you understood. So you have to refer to the section 5. Section 5 lays down the various criteria, objective criteria, to decide where the place of supply is. So you have to go by that for the goods, and section 6 refers to the various criteria for the services. So you have to go by that for the services. Friends, it's a very huge rules. I cannot go into the details of that. I am just giving you the broad idea how one has to proceed. Correct? So you just keep in mind location of supplier and place of supply. These are the 2 criteria which decides whether it is an intrastate or it is an interstate. Now, once it is decided, I have to pay the intrastate IGST or CGST, SGST, then on which value you have to put. Friends, there are 2, if this is the broad scheme of the valuation, where the price is a sole consideration and buyers and sellers are not related at all. Price is sole consideration and buyers and sellers are not related. Then you can take the transaction value What do you mean by transaction value? Transaction value means the price at which you agreed to sell the goods or services, and plus certain list of the items has been prescribed in the law in section 15.2 and 15.3 that is to be added in the transaction value. For example, now the free supplies of the goods. Suppose if you are given a works contract, if you are a contractor and you have taken the works contract, and the works contract is charged at rupees 1 crore rupees, you charge 1 crore rupees, and the principal, the person from whom you got the contract, is supplying you the free material of say 50 lakh rupees, then the transaction value will be 1 crore and 50 lakh rupees, not a 1 crore rupees. Similarly, all reimbursement of expenses other than a pure agent will form the part of the value of the supply, that is the transaction value. And where the price is a sole consideration, and even if the buyers and sellers are related, but if you prove that our relationship has not affected the price, then you can take the transaction value. So we understood about the transaction value. Now I come to the other part. In certain cases, you cannot take a transaction value. You have to go by the valuation rule. What is the valuation? In which circumstances you have to go to the valuation rule? Where the consideration for goods or service supplied by you is not in money, wholly or partly. If you have received the consideration, whole consideration in kind or partly in kind, then you cannot apply the transaction value. You have to come to the rule. Secondly, if the buyers and sellers are related and it appears that price is influenced, then the transaction value is of no consequences. You have to go on the valuation rule. And they are saying for pure agent and money changer, insurer, air travel agent and lottery agent, they'll be prescribing a separate rule. For this, you cannot go on the transaction value. They'll be prescribing a separate rule. They have already prescribed the rule for the money changer. Foreign exchange dealer ke liye they have prescribed the rules. For other, they are going to, they will be prescribing the rules. And friends, the most problematic area here is if the officer has a reason to doubt the transaction value, then in that case, one has to go by the valuation rule. Now, what is the valuation rules? Valuation rules, the transaction value, as I have told you, is under Rule 3, where you have to include certain value, and transaction value you understood. If the transaction value is not to be accepted by the department, if they has a doubt, or as I have told you in the other circumstances, where the consideration in kind and the buyers and sellers are related, in that case you have to follow the comparison value method, value comparison, like goods, like quality goods and like quality services. You have to take that value and market value of the goods and services and pay the tax. If market value is not available, then you have to go by the computed value, means basically the costing method. You find out the what is the cost of that provision of the services or goods, and on that you have to pay the GST. And residual value. What do you mean by residual value? If you cannot apply any other rules, then you go by the normal principles of valuation and do the valuation. And you have to do this valuation sequentially. It means first you have to go by the transaction value. If not available, then go by the comparison value method. If not available, then go by the computed value method. And if not available, then go by the residual value method. Very complicated rules. They have borrowed it from the customs. These are the custom rules. Friends, you may have to study these rules in the detail. Now, what is the GST? As I have told you the value, then you will say what is the rate at which I have to pay the tax. See, today the rates are not yet prescribed. What we have been reading the newspaper reports, and in last GST meeting held on between 16th to 19th October, they have given this indicative rate. Exports and essential commodities nil rate. The precious metals, that is gold, silver, etc. at 4%. The food items and other necessities Naturally, it could be pharmaceutical or food items, that is 6%. Substantial goods and services, 12%. Maybe it is, not exactly the necessity item, but it is then also semi-necessity item. It is, 12%. The standard rate, they say it is 18%, and for luxury goods it is 26%. But friends, these are the indicative rates. No consensus is obtained in GST Council meeting till date, and the same is to be decided. The same is to be decided. Again, the council is meeting on 3rd and 4th November to decide about the rates. Friends, once you have decided value, then the rate, then your gross liability has come. Now you can take the ITC, means input tax credit. Whatever IGST you paid or CGST you paid or IGST, SGST you paid on your inputs, paid on supply of goods and services, which are used by you in the furtherance of course of business, you will be entitled to the input tax credit. And this input tax credit will be credited to your electronic credit ledger. The GSTN network will maintain your electronic credit ledger, wherein when your supplier uploads their outward supply, it will be captured in your electronic ledger, and it will be, you will be eligible for your ITC credit if that, ITC is this input services and input goods are used by you in the furtherance of your business. More or less the same principle of VAT and our ITC credit, but subject to certain, this is the condition, For availing the ITC, you should be in the possession of the tax invoice, debit note, supplementary invoice, or any tax paying document. For example, if you are paying under reverse charge, then the document, challan, paid under reverse charge, that has to be, you can claim on the basis of ITC on that basis. The second condition, for claiming the ITC, the goods and services should be physically received by you. Here the question comes, whether on advance paid, will you be eligible? Advance paid, you will be paying the IGST, CGST or SGST, you will be paying the GST, correct? So whether at that stage you will be entitled for the ITC or not, that will be a big question mark, because the receipt of the goods and services are basically is a prerequisite for claiming the ITC. The supplier, again, another condition is it, the supplier, means supplier who has supplied to person claiming ITC, should have paid his tax to the credit of the appropriate government. It means, unless and until my vendor do not discharge his service tax or his GST liability, I am not eligible for my ITC credit, even if I have paid GST to him. Exactly today, we have the same provisions in the Maharashtra VAT law. Unless and until my vendor do not pay the VAT to the government, deposit to the government, I don't get the input tax credit. The same provision, they have taken it here. And friends, one more very stringent condition, my supplier should have filed his return. So to get the ITC credit, I should have the document in my hand. I must receive the goods and services physically. The input tax which he has charged me, he should have paid it. And on top of it, my vendor should have filed his GST return. Friends, once the credit comes to your account, then please understand, your IGST credit can first be used only for the payment of IGST. You have to follow strictly this order. IGST to IGST first. IGST, if any balance is left, then IGST can be utilized for the payment of the CGST. And till if balance left, then you can use IGST for payment of the GST. Means IGST utilize means it is fully fungible, but you have to utilize in the same order. IGST first you have to use for payment of IGST, then CGST, and then SGST. Come to the CGST. CGST can be first utilized for the payment of CGST only. If balance remains in CGST account, CGST ITC account, then you can use it for the payment of IGST. And in no circumstances CGST credit balance can be used for the payment of SGST. No CGST payment can be used for the CGST. And friends, here I would like to draw your attention. The frequently asked question and the newspaper reports and all the things suggest. For example, you are having the branches in the 10 states. 2 states, say Gujarat, Maharashtra. And Gujarat, you have the CGST input tax credit of say 10 lakhs rupees. And Maharashtra, you don't have the CGST credit of say single naya paisa, correct? And in Maharashtra, if you have an outward liability of say 5 lakhs rupees of the CGST, you cannot utilize the CGST balance of the Gujarat. Are we clear on this? Yeah, that is what the intention of the government, that CGST balance of one state cannot be utilized for the CGST balance of the other state. Now I come to the SGST. SGST balance can be utilized, SGST credit balance can be utilized only for the payment of SGST first. If some balance remains thereafter, that SGST can be utilized for the IGST. But SGST can never be utilized for payment of CGST. Means one thing is very clear, entire credit is fungible vis-a-vis IGST. But CGST cannot adjust it, CGST cannot be adjusted against the CGST cannot be adjusted against the SGST, or SGST cannot be adjusted against the CGST. Tax scenario post, friends. I don't have the time to explain. This is the thing. Friend, if I can explain you this one scenario for the chain of goods. See, you are seeing the left hand side, which is the left hand side, that it is state of Maharashtra. Yellow side you are seeing on the right hand side, that is Gujarat. And on the top we are seeing is, say it's out of India, it's an overseas territory. Now a person is having the factory. Person is having factory in Maharashtra, correct? And let us first he buys the goods, say from overseas, correct? He imports the goods. At that time he will pay the basic custom duty, because his custom duty is not subsumed in the GST. So basic custom duty will be cost to him, and he will have to pay the IGST also. And IGST will be salvatable. It means he will get the credit of it, correct? So from overseas vendor, whatever he buys, he pays custom duty, he pays IGST, he pays the IGST, correct? Now, similarly, he buys it from the local vendor. He buys the purchases, he buys the goods, and he buys services also. Naturally, he buys from the Maharashtra dealer, factories in Maharashtra. Then the Maharashtra dealer will charge him CGST or SGST, correct? That also he will get the he will get the credit of it. ITC credit he will get it. Now he buys it from the Gujarat. See, he buys from the Gujarat vendor also. So Gujarat vendor will see the vendor in the Gujarat, when he supplies to the factory in Maharashtra, he will charge the IGST. So IGST also will be, he will get the ITC credit. So friends, you have understood the purchase side of it, correct? Now we go to the sales side of this. Suppose from factory Maharashtra, I export the goods to the overseas customer. Friends, this being an export, it will be zero rated. I will not be paying any CGST or SGST. I will not be paying an IGST on that, sorry. because it is overseas, and since it is zero rated, I will not be paying the IGST, correct? Now from my factory from Maharashtra, if I transfer the goods in the warehouse in Maharashtra, though branch transfers are covered under the GST, but see, branch within the same state will not be having a separate number. So it will be supplied from the same person to the same person. There will not be any GST on that. Are we clear on this? Intra-state branch supply will not be liable to GST. And from my warehouse from the Maharashtra, if I sell the good to distributor in Maharashtra, I will be charging CGST and SGST, correct? And my distributor, when he further sells to the retailer, then the distributor will charge CGST, SGST to the retailer, and the retailer will get the SENVAT credit of it, ITC credit of it. When he sells it to the customer, he will also charge CGST, SGST, and he will get the ITC credit of this. So this is the Maharashtra sale. Now you come to the Gujarat sale. From Maharashtra factory, if that assessee is having the warehouse in the Gujarat, when he transfers to the warehouse in the Gujarat, he has to charge IGST. Even if he is charging to his own warehouse, is sending to the own warehouse, the branch transfer will be liable to the GST, and he has to, since it is interstate supply, will have to levy the IGST. If we supply directly to the customer, from factory to direct to the customer, then also IGST levied. If we supply factory to the agent, then also IGST will be levied. When the agent further sells to the customer, then since the agent in Gujarat, he will charge CGST and SGST because it is an intra-state supply. Similarly, from my warehouse from Gujarat, if I am charging to my customer in Gujarat, I will be charging the CGST, SGST. I think, friends, if you understand this chart, then entire, the transaction chain, supply chain of goods is, will be very clear. Why is not moving? It's not moving. It's not moving. Slide is not moving. Friends, next I have the slide for, supply chain for the services, which is more or less identical to this, and I have the very short time. So what I will do, see, service provider also more or less the same, concepts will apply. So I'm not dealing with this. Friends, I will be finishing off within 5 minutes. Can you tell how much time is available? 10 minutes. I have 10 minutes. Friends, let us understand what is the difference. See, entitlement obligations under the present laws and the GST. See, ITC, input tax credit of a pre-registration period. Suppose if I have started, I have registered my, I have taken registration. See, in the month of, I have started business in the month of April, and I have taken the registration in the month of November. So the issue will come. What happens to my ITC credit from April to October, where I was not registered? Friends, under excise and service tax, you are getting the SENVAT credit of it, but under VAT you are not getting. Now under GST also you will not get it. Pre-registration credit will not be allowed to you. When the supplier does not discharge his liability, you will not get the ITC and GST. The same position in the VAT, but in service tax and excise, where we are entitled to it. Allowance of input tax credit of the tax. Let me tell you, whether the mandatory audit by CA and cost accountant for assessing the prescribed value, today we do not have the audit by independent auditors. under the central excise and the service tax. But under the Maharashtra VAT Act and so many other state VAT Act, if above prescribed turnover, if the assessee is having the turnover, then the mandatory audit, mandatory audit, Ravi? Rejoice, the webinar will end in 5 minutes. Yeah. मैं चालू रखूँ क्या? Rejoin बोलो से मैसेज दिया. Hello. Hello. Now, so refund. See, the mandatory audit, the turnover above, they will prescribe certain limit, and above that, if you are having the turnover, then mandatory audit by the CA or by a cost accountant. Here they have included the cost accountant. Under the Maharashtra VAT law, only chartered accountants are entitled to do the VAT audit, but here the cost accountant or chartered accountant, both will be entitled to the audit. We have discussed about the TDS. TDS will be applicable. Reverse charge mechanism application, tax on advance receipt. The GST is leviable on the advance receipts also. Friends, procedures, I will take only the returns. Returns, you have to file on the 10th of the month. First return outward supply, giving all details of your, all purchases of goods and services. You have to punch in online. On 15th of the month, you have to file the inward supply return. On 20th of the month, you have to file a consolidated GST return. GST, the returns are monthly. Person paying the TDS, person paying the TDS, he has to file the return monthly. IAD return is monthly. And composition dealer has to file the return quarterly. 3 months, every 3 months, for every quarter, they have to file on the 18th of the end of the quarter. And one annual return will be there. That annual return for the financial year ending will have to be filed on 31st, on or before 31st December. So suppose April 2017 GST comes, 17-18 financial year, one has to file the annual return before the 31st December. Friends, assessee of a reasonable size having the ISD facility will have to file a 61 returns in a year. And if you are having, suppose, a presence in all the state, that 61, maybe, you have to multiply by 29. So this compliance is a very, very huge burden. What is the professional opportunity for us as a profession? Advisory. It's a novel concept, structuring and advising on supply chain business model, advising on the tax optimization, compliance. As I have told you, there is a voluminous compliance, correct? So whether a chartered accountant or any professional can really take the compliance work, it's very responsible work and very huge work it is. Then litigation, yes, there would be a litigation under this law. You can think of litigation practice. Training and orientation. We see a great opportunity here. You have to train the people in GST. You have to give the corporate training. You have to give the training to the staff of the clients. It could be, good practice area to begin with, for at least for initial years. Software and system upgradation. GST will require all your accounting systems and softwares to be upgraded. A chartered accountant or a practitioner is can offer great help to the organizations, the business entities to, for system upgradation. And last but not least, GST audit. The GST model law prescribes the mandatory audit, at least for chartered accountants. It could be a good professional opportunity. Apart from the statutory audit, it could be a due diligence and other, concurrent audit of the GST compliance could be a good practice area. Friends, with this, I may conclude my, presentation. Yeah. And if there are any questions
You can type it.
pertaining to this, you can type it in the dialog box, and I will,
We'll try to answer.
we will try to answer within, we have now 10 minutes, 10 minutes. So in 10 minutes, if somebody has a question, you may type here in the dialog box, and I can, मुझे क्या करना है? हाँ, अच्छा.
उसको dialogue box to- नहीं टेस्ट नहीं है।
मुझे क्वेश्चन किधर मिलेगा?
No, you can see that.
तुम्हारे
So,
सामने
enlarge करेंगे.
enlarge कर दो, enlarge कर लो. I have to wear this?
No, no.
अच्छा. Answering?
Actually, it has an inbuilt mic.
अच्छा.
We will sharing this presentation by email.
I will pass on to the chamber. It is up to the chamber management whether to circulate or not. I will definitely pass it on to the chamber, and it will be the decision of the chamber management whether to. Chamber president tells me that he'll be circulating to will be putting on our website. It will be put it on the member website of the chamber. You may download from it.
His name is Dinesh.
Dinesh Tejwani is yeah,
Yes.
Dinesh ji, this is your question that whether will be uploading or not. Yeah, chamber will be uploading this presentation on its website. I think you may know listen na.
One more question.
Yeah.
One more question. You can't record it, whether-
Sorry.
Okay, that's one.
Yeah.
From Dinesh Tejwani, in case of mismatch of GST-2 and purchase register, for how much period it can be kept pending?
Friends, Dinesh ji, see what they are saying on 10th of the month. You will be first putting your outward supply, correct? By 15th of the month, you will be putting the inward supply, correct? And whatever mismatch are there, that will be popped up or thrown to you, and you have to complete it by 28th of month, 28th of the month when you file the monthly return. 20th of the monthly return. And friends, even if it is not there, in my opinion, the Senvet ITC credit can be kept for 1 year or up to the date of filing of the annual return. So this is my preliminary views. If need be, I will check it up and can come back to you. You can mail me on my email ID naresh.seth@nsha.com. The reason is this: I am not able to answer you very clearly here because these are the procedural things, and I have not means we need to. So many things are yet to be clarified. So better we can be you can put me a mail and I will give me your telephone number. I can in the mail we can talk over the phone, sir. Yeah.
There is one question.
Yeah.
They are saying that where we will find this recorded webinar.
Uh,
So it will be put on the YouTube.
Friend, the chamber management confirms this particular webinar content will be put on the YouTube, and you can share it on the
YouTube will be posted again on the website of channel.
yeah. Please, sir.
The seminar will be recorded on the YouTube and will be posted on the chamber's website. So all the participants will be able to take a benefit of it.
Okay. There is one question from Mr. Sanjay Shah. He is asking if a company based in Maharashtra conducts an offsite in Pondicherry, then an amount paid to hotel in Pondicherry shall be under IGST, and can the ITC can be claimed on as IGST?
Friends, this is a question pertaining to the place of provision of place of supply rules. As far as the Pondicherry hotel or resort will be charging you CGST or SGST only as per place of supply of rules. So, place of 1 minute. Let me refer to the rule itself. Give me Sanjay bhai 1 minute. Event.
Section 6. Section 6.
6 પણ એમાં પેલું જે છે ઇવેન્ટ નું જે છે એ પણ ઇવેન્ટ નું ક્યાં છે ઇવેન્ટ નું સેપરેટ ને you are saying your seminar has been held at Pondicherry, correct? Or it is you are talking of an hotel accommodation, lodging and other thing. See, there are the
It's offsite, so it's a seminar.
huh?
It's offsite, so it is a seminar.
It's a seminar કરીને.
It's a company leadership training.
Yeah.
Shall know the location of such person.
Sanjay bhai, if it is a off-site seminar of your company, then the Pondicherry company, when you give your GST number, they will have to charge you IGST because your case is covered under section 6 bracket 8 of the IGST rule, and as per that the service are deemed to have been provided at the place service recipient is located. Suppose you are located in Maharashtra, your company is located in Maharashtra, you have done the seminar in Pondicherry, then the place of supply will be deemed to be a Maharashtra, so the Pondicherry resort will charge you the IGST and you will be able to take the credit of the IGST. As we have discussed, the IGST can be set off against the CGST or SGST.
There is a question from Dhawal Sanghi. In your view, shouldn't custom duty be submerged in GST? What is the reason it has been kept out?
Friends, I am not sure, see, why it is kept out. Basically, the custom duty is for, it's sort of, in order to protect the local industry. So they don't want to keep, they don't want to encourage the imports of the goods. So in order to keep a deterrent on the import of the goods, in my view, perhaps the custom duty might have been kept. Yes, you are right that it is not subsumed in the GST, so it will be an additional cost to the importer. Only purpose seems to be that to protect the the Indian industry or to promote the Indian industry.
So friends, I thank the speaker Naresh Bhai. He has given a very broader outlook of the subject on the basic concept of the GST. And this is the very first experience for the chamber to start with the webinar. Now series of the webinars will be launched, being a very successful model. And because our vision is like we would like to connect member wherever they are located, and wherever outside Mumbai, wherever they are, we will see that the chambers quality programs, the people will be getting more and more benefit. And this is the first step towards that. Shortly, we will be launching with the live webcast also, which is already in the process, and which could not be done in the last week because of some technical snag. And I also thank all my committee members, particularly my office bearers, IT committee chairman, vice chairman, and the IDT committee chairman for cooperating and making this event more successful. With this, and you all are also requested to give your feedback so as to give a critical inputs to enable us to improve further on this program or any formats, whatever you feel desire. Your feedbacks will be very important to us, and it will carry a lot of weight for us to improve further. With this, I conclude this session. And I forgot, like I just we would like to offer a moment to the speaker.
Part of the we are part of the chamber only, sir.
So thank you, Naresh.
Thank you very much, sir. Thank you very much.
And now I declare this session as completed, and we'll be just logging out of this webinar. Thank you for all your cooperation.
Properly.
Yeah, everything.